Hello guys, welcome to our new class. The cost of finance. This is a subject related to business, and it is for all of the HND students or any business student. The cost of finance. Finance has a resources. It has got the working capital management, cost of finance, and treasury management. We have got an example here. Cost of different sources of finance. Share capital or owner savings, dividend, and cash. A payment made by a joint stock company to its shareholders for providing share capital. It is a distribution after tax profit, profits of the company, sources of income for investors, expected to increase over time, dividend as cost. A 100 shares in company Z, for example, company Z pays dividend twice as a year, pays 20 pence per share in March and September. Cost of dividend to the company Z 100 multiplied by 0.20 multiplied by 2 equals 40 pound. The price of 100 share is 800 pounds. For company Z, it's equivalent to interest rate equals 40 divided by 800 equals to 5%. Scrip dividends capitalization issue. New shares instead of dividend in cash. In USA also called stake dividend. The company returns for more cash. Information cost of financial report annual general meetings, cost of audit fee, legal fee, stock exchange requirements of disclosure of information, investing costs, paying charges, commissions, advisors fees, borrowed funds, interest, fixed interest or variables or floating interest rate, business prefer fixed rate loans, variable interest rate equal base rate plus premium. Premium is fixed base rate where there is a wide variety of debt instrument pays floating rates, tax, initial arrangement fee or administrative cost, commission and interest for unique period, loan payments, financial and non-financial cost, opportunity cost, the cost of alternative that must be foregone in order to pursue a certain action. Benefits you should have received by taking an alternative action. The difference in return between a chosen investment and one that is necessarily passed up activity. By taking out a loan of 50,000, a business can buy new machinery while which will generate extra profit of 10,000 per year. The interest rate is 10%. What is the opportunity cost if the business spends 5,000 a year on advertising instead of taking out the loan? Government grants, administrative cost, time wastage, opportunity cost. D. Retained earnings for sale include cost, example, wages, rent, material, electricity, etc. Business pay tax on earnings, payment of dividends for shareholder goodwill, reinvestment of digital environment, opportunity cost, working capital and its management. Short-term current asset minus current liabilities equal to WC, also called net current asset turnover fairly quickly in the course of business includes raw material work in progress, finished good amounts, receivable, main- maintaining liquidity is very important. Basic terminologies, current asset cash, stocks, debtors, current liability, amount that must be paid out within 1 year, example, raw material, taxation payable, dividend payment due, short-term loans. Tax asset things of business instead to keep for a long period, example, buildings and machines, liquid assets easily converted into cash, liquidity, activity, share capital, and retained profits appear to have similar costs. What is the difference between them? The operating cycle period between the payment of cash to creditors and the receipt of cash from debtors shows the connection between investment and working capital and cash flow expressed as a period of time. Operating cycle in detail, suppliers, raw materials, stocks, raw materials, work in progress, additional liability incur, finished goods sold on creditors are paid, cash is received by collecting debit, longer to term stocks and debtors into cash or the payment period to creditors shortens. Operating cycle will lengthen, investment and working capital will increase. Working capital management, sufficient liquidity resources, high level of working capital, low risk of in- insolvency, high level of working capital, less profit because volume of current asset depends on nature of business, current liabilities, a cheap method of finance, too long a credit period, damages relationship with suppliers, more assets, tied up cash, opportunity cost, basic terminologies, turnover, substitute for the word sales, raw material items that are processed to make the finished product, steel, cars, overhead expenses on things not used directly, and the production of the finished item, factory rental cost of lighting a factory, variable overhead depends on how much is produced, fixed overhead do not change on matter how much is produced. Overtrading, doing too much with too little long-term capital, may successful in the start but run into serious trouble because it's short of money cause of overtrading. Yeah, well, that was the end of our class today. We learned about operating cycle in detail, the opportunity cycle, activity, basic terminology, working capital and its management, government grants, retained earnings, activities, broad funds, cost of different sources of finance, the cost of finance. Well, thanks for having me, and this was the end of our class. See you in other classes. Thank you. Bye.